Hi, my name is Jiang, and I'm from Langley High School. And alongside Joshua Zhou from TJHSST, we're excited to present our investment analysis on BYD company ADR. Our presentation today focuses on why we rate BYD as a buy and the critical drivers behind its strong performance in the global electric vehicle market. Now, on to a quick company overview. BYD is in the electronics and automotive industry. Their ticker is BYDDY, and their current price as of August 1st is $98.72. Our target price is $135.15, which is a 36.9% increase. Our recommendation is buy, and the investor relations are Ogilvy and Mather, with the email address listed on screen.
BYD is a leading Chinese multinational enterprise that has become a key player in electric vehicles, battery technology, energy storage, and rail transit solutions. Founded in 1995 by Wang Chuanfu, the company has grown to employ nearly 1 million people and generate over $107 billion in revenue in 2024. BYD operates across three primary segments. The company produces a diverse range of electric vehicles in its automotive division, including premium models marketed under sub-brands like Denza and Yongguang. In electronics, BYD provides essential components and assembly services to major technology brands. Finally, in the energy sector, BYD designs and manufactures advanced batteries, solar panels, and energy storage systems, while also offering innovative green transit solutions. This diverse business model supports BYD's strong global market position and ongoing success. BYD is the world leader in EV unit sales and the largest global EV company by revenue. Additionally, BYD is the second largest producer of electric vehicle batteries, thanks to its FinDreams battery subsidiary. This strong performance is driven by their growing global sales reach, with vehicles sold in more than 70 countries, with about 82.6% of sales in China and the remaining 17.4% being international.
We rate BYD as a buy with a target price of $135.15. Our investment thesis centers around three key drivers. First is BYD's business model. BYD uses a vertically integrated business model that allows it to manufacture key components such as batteries. This has streamlined its production and efficiency, as well as increased the diversity of its products. Second is its rapid global expansion. BYD is aggressively expanding its international presence, aiming to double its overseas sales. These new markets will allow BYD to grow and broaden its global footprint significantly. Finally, BYD has a business model that appeals to consumers. Due to its vertical supply chain, BYD can deliver high-tech features at a competitive price point, driving up its popularity and giving it leverage over its competitors.
Turning to the broader industry, the global electric vehicle market is poised for robust growth. It is expected to expand at a compound annual growth rate of 13.8% from 2025 to 2032, growing from around $671 billion in 2024 to nearly $1.9 trillion by 2032. As EVs become more affordable and advanced, this growth is both steady and reliable. In terms of market share, BYD leads with 23.2% of the global EV market, a stark contrast to Tesla's 10.3%, which has declined from 13.2% since 2023. Other key players include Geely Volvo, Volkswagen, and SAIC.
In the area of EV battery production, the market is also booming. Forecasts predict the growth from USD 106 billion in 2025 to USD 370 billion by 2034. With a compound annual growth rate of 21.5%, BYD holds a 17.2% share of the global battery market, second to only CATL. Their vertical integration in battery production not only supports their automotive operations, but also positions them to capitalize on increasing demand, particularly as European markets and others expand. This additional source of revenue makes the company a stable stock pick.
BYD's competitive advantage is built on a wide economic moat. In its domestic market of China, the company holds an extremely dominant position with over 30% market share, which has fostered widespread brand recognition and long-standing consumer trust. Continuous investment in research and development has enabled BYD to introduce cost-effective technological advancements such as fast charging and advanced driving assistance systems. Furthermore, the company's emerging global dominance is evident, having recently surpassed Tesla as the world's best-selling EV manufacturer, with annual sales that exceed that of Tesla by over $100 billion. These strategic advantages, combined with a solid integrated supply chain, effectively mitigate competitive pressures and secure BYD's leading position in the industry.
There are four key revenue drivers. First is product variety. BYD has strong sales due to its diverse EV offerings. This diversification allows BYD to capture more of the market. The second driver is BYD's rapid international expansion. Its rapid growth in foreign countries is drawing in new markets and revenue that significantly boosts its success. Furthermore, localized production out of China helps BYD reduce costs even further and avoid tariffs. The third revenue driver is innovation. BYD invests heavily in research and development. These continuous advancements in technology help BYD maintain a competitive edge in the market. This comes in correlation with BYD's AI investment, which is expected to stimulate new revenue streams. BYD's financial health is another strong indicator of its long-term value. The company reports a profit margin of 5.18% and a return on equity of 23.82%. Notably, its net profit grew by 34% year over year, which is an impressive achievement made possible by the efficiency of its vertically integrated business model. When it comes to growth, BYD has maintained its average annual growth rate of around 29% over the past 8 years. Looking forward, projections suggest a sustainable growth rate of approximately 16%, fueled by surging EV demand, increasing global market share, and aggressive international expansion. These statistics point to BYD being a very attractive stock pick. Our valuation of BYD uses both a relative valuation method and a discounted cash flow model. Starting with a P/E based approach, we use the formula to calculate the price target, yielding a value of $131.49. We also use a discounted cash flows model. Our key assumptions include a 60% growth rate, an 11% discount rate, and a terminal growth rate of 3%. Although the industry average for the terminal growth rate is 3.5%, we use 3% as the EV market is extremely competitive. The model produced an intrinsic value of $138.80. Taking the average of both models gives us a final price target of $135.15. This represents a 36.9% upside from the current price and supports our buy recommendation.
While BYD has a strong foundation, it is not without risks. The first is price competition. As competitors lower their prices in such a competitive market, the entire industry could face price wars. BYD mitigates this risk through high production volume and its dominant market share. The second major risk is trade barriers, such as the 17% tariff in Europe and the broader US-China tariff tensions. However, BYD is actively expanding into other regions, which helps reduce dependency on any single market. Finally, brand perception poses a challenge. BYD lacks the luxury appeal of brands like Tesla, but the company is investing heavily in research and development to enhance both its technology and brand identity. BYD distinguishes itself through strong performance in environmental, social, and governance aspects. Environmentally, the company's electric vehicles have helped reduce CO2 emissions by over 2.38 million tons, and its proactive measures like installing solar panels at factories show a commitment to sustainability. Socially, BYD maintains ethical labor practices through initiatives like BYD Smart, partnering with unions, fostering an inclusive workplace representing 50-plus ethnicities. Finally, BYD operates under a diligent supervisory board that ensures transparent financial reporting and regularly updates its governance policies to meet evolving standards. These efforts collectively reinforce BYD's reputation as a responsible and forward-thinking company.
Artificial intelligence is a significant opportunity and potential risk for BYD. The company is actively implementing smart driving features and is progressing toward Level 3 autonomous driving capabilities. And in manufacturing, AI is being used to reduce production costs and accelerate scalability, contributing to higher profit margins and faster market expansion. However, BYD must also be cautious. The growing use of AI in vehicles puts it in a direct competition with leaders like Tesla, especially in neural network-based autonomy. To stay competitive, BYD must continue innovating. Additionally, regulatory concerns about AI and data privacy could delay or block the adoption of certain technologies, posing a material risk if not managed carefully.
If there is 3 key takeaways for you to remember, it would be BYD's global expansion, steady growth, and the stable EV market. With a target price of $135.50 and a 36.9% upside, now is the time to invest in BYD. Thank you.